as much. I think that you really want to be more of a dip buyer at this point. It's hard to chase up here, and we've had this spectacular performance, particularly in the semiconductor space, with SMH, the ETF we like to watch, making new all-time highs. We're seeing NVIDIA right now sort of in a range. I would probably say if I were going to go anywhere to add to a position, it might be there because it's been trending. And when I say trending, I mean it's consolidating. And what I'm really looking for at this point is risk management, because we've been up with higher lows 4 weeks in a row all across the board. If September closes positive in the SPY, it'll be 5 months in a row. We're heading into a positive seasonals. But what we're seeing, and getting back to the AI question, is a lot of talk of overvaluation, a lot of mergers, which people think means that money's just being pushed around without any real new money coming into that market as far as the companies themselves. And of course, we've got the buzz about the chips and Intel, that happening in the US. But I think right now, what you're looking at really is gold and silver sending a message. And I think that, for me, is probably prevalent in my mind going into this week.
So, Mish, talk to us a little bit more about gold. I mean, I can't think of anybody who doesn't like gold at this stage, and that's probably the best, if not ultimate, hedge against what could potentially go wrong in the equity market, right? I think you'd agree on that. Where do you see gold heading right now? I mean, we've been north of 3,700.
Well, yeah, it's close to 3,800. So right now, what's interesting about gold, it is now dominating as a reserve asset over treasuries for the first time in 30 years. And so we can see the massive amount of accumulation. But the question, of course, is why and what would make that stop? And this, to me, is the great mirror. It's the great mirror of rising debt. It's the great mirror of geopolitical concerns. It's the great mirror of some social unrest that we are starting to get buzzes about in the United States. It's the great mystery of reflection of tariffs and inflation. Food prices went to all highs of 2025 recently. So instead of inflation coming down, as the numbers may be suggesting, or flatlining, it's actually still going up. So you put all of this together with gold and now silver catching up and copper with some supply issues, you've got yourself a stage for some potential really strong inflation coming in, a hyperinflation, and that would probably be the thing to stop the train in the market.
Michelle, I'd like to take you back to what you were saying about the precious metals market. Specifically, you were saying that gold is a mirror of tariffs, of inflation, and a bunch of other things. You also mentioned a few of the other metals, which I'd like to pick up on there because, look, whether you're talking about silver or platinum or palladium, they all have different uses, right? And, from industrial uses to, being in key ingredients in the EV story and the renewable energy story. So if you had to back one of those metals, the one that potentially from here has the most upside, because gold has done incredibly well, which would it be?
Well, I'm really still focused mainly on silver, and particularly not just silver in and of itself. It went to $46. I mean, that's extraordinary. I was on this show at the last year when it was trading at around $24, talking about watching silver. So here we are, $50, of course, being a big target. But to me, what's even more interesting, and if you really want to get a sense of inflation, what you have to look at, I call the trifecta of inflation, and one of those factors is how silver relates to gold in terms of the ratio. And 80 is a huge number in that silver to gold ratio, in that gold is trading 80 times or more higher than silver, generally favors silver. And then if that breaks, that doesn't mean gold's going to fall necessarily, but silver can really skyrocket. And that's going to take up platinum, which is at 11-year high right now. Palladium starting to catch up. And of course, copper for its own reasons. And all of this makes sense. These are assets, hard assets, that are needed for whatever we're talking about, whether it's clean energy, whether we're talking about AI data centers, and of course gold being this reserve currency almost right now. This really is sending a signal that is amazing at this point, has been sort of pushed to the side in terms of the minds of a lot of retail investors, to the tune of $23 billion have come into the market just by mom and pop investors in the last couple of months. So they're not really paying attention yet, but they should.
Yeah, absolutely. Michelle, another thing that you said earlier was that we're heading into a seasonally positive month. But if I'm just going back through history, doing little calendar gymnastics here, even if October does tend to be, mildly positive overall as a month, there are still a few notable years that are incredibly scary, like 1929, 2008. Of course, we were covering the GFC at the time. 1987, I remember sitting in my year 7 classroom and the teachers saying, "Oh my God, Wall Street has crashed," and of course, meant absolutely nothing. More interested in pop songs. But still, is there anything this October that potentially has the right ingredients or the wrong ingredients to create something a little nastier than a positive month?
Well, yeah, I think inflation would probably be my number one concern. And then, of course, the geopolitical situation. One thing we haven't talked about, which could give us, and by the way, I was on the trading floor in the commodities exchange on October 19th, 1987, so I remember it extremely well. And the other thing I want to say is that when the seasonals do not behave, generally that's a good signal. Like September was supposed to be seasonally weak, and instead it wasn't. So if October on is supposed to be seasonally strong and it's not, that's a message as well. But yeah, I think, right now oil and natural gas have been really undervalued, I think. They're very heavily shorted by a lot of speculators. And yet there's a lot of reasons to think that those two areas can explode, not just for the incredible demand from AI and data centers, with nuclear material not quite there yet, and lithium, and and coal, of course, has made its move. Oil and gas has kind of been sitting there, and there's been talk about gluts of supply and not as much demand, but it turns out not true. The Permian Basin where we live, we're starting to see less drilling, less fracking. We're seeing more demand than we thought. If oil really starts to break out here, and let's just talk about WTI, West Texas crude, if that goes up over, it's at 65, if it goes over 70, we can see a move to 85, 90, or even higher very quickly for whatever reason. And I'm not really concerned about OPEC Plus talking about turning on the faucet again in November. I think that there's something else going on a little bit more insidious in the market, and it needs to be watched.